All right. All right, Kraft Heinz. All right. So I pulled together some uh, charts and data trends to show you what's happening in consumer brands. A generalistic view. Brand loyalty is all about, customer perception. Grubhub last year talked about how customers were promiscuous. They weren't really loyal to anything. And in order to have good customers that are loyal to you, you have to build this level of trust to manage expectation and to meet it or to beat it. So if you can create a brand that meets the customer expectation or beat it, will get very good loyal customers. And the top 10 customers, according to HubSpot, uh, would be 3x your average customer. So 10% of your customer base is willing to spend three more times than your average customer. That's a great advantage to a brand if you can get those loyal customers into it, right? So why are you loyal to a brand? Obviously the brand or the product have to be good, and then, the deals, the service, and then other, you know, qualitative things like convenience, charity, popularity, etc. Now, besides the typical customers, um, the growing customers, the customers with the most purchasing power in the future are the millennials. And the millennials they care about reliability, their durability, quality, customer service. And then you can see that, moral standards and other qualitative stuff are a little bit higher for them besides the product itself. So out of these key qualities, you have the product, the durability, etc., right? Those are things that you can control, and it's easy to do. Well, what about the things that aren't so defined, right? Convenience, for example, isn't really defined. What is really convenient to a customer? So typically, the convenience trend is that people are usually uh, eating more at home. You know, they're they're picking up food at restaurants. They're getting carryouts. Pretty much everything that can enable them to eat at home quickly, and it saves their time. And there's obviously different demographics in this convenience, right? You have like 64% of millennials from ages 18 to 34 consumes grocery food versus baby boomers, which is 51% that would consume dinners at home. And then you can see Generation X, your parents or uncles, where they're like 35 to 50-year olds. 53% of them would, have restaurant delivery food versus baby boomers, where it's only a quarter of them that would have restaurant delivery food. So, what are the controllable variables to these customer trends? Well, people want to not only feel good about what they're eating, but they want to eat quality food. Uh, I believe Fatty did grocery stores for the last 2 weeks, where he, spoke about Wise Market, Weeze Market, and Sprout Foods, where Whole Foods have the highest revenue per square footage of any grocery store, right? By a far margin. So obviously, food quality matters to people. It's they're getting more suspicious about what's in the ingredients of these food labels. All right, now let's get into the fun stuff. What happened to KFC and what particularly happened with KFC and myself. So when I bought KFC initially, it was $41, and then in Q2 of 2019, the stock dramatically dropped, and I just sold it at a loss for $32, right? Over those period of time, the stock has fluctuated in the low ranges from like 20 all the way up to 30. And now it's back to about $30. 2019, the price was around $31. And it kind of is giving KFC a little bit of grace time because of this coronavirus, where people are going to grocery stores more often and getting back to familiar brands. Or else, I think, Kraft Heinz would be back in the 25 range instead of the $30 range. Um, so what occurred in 2019, particularly with Kraft Heinz? They had a delay in SEC financial reporting. If anyone follows 3G Capital, they hired a 29-year-old 3G partner to run a Kraft Heinz CFO. He doesn't have any consumer brand experience in ever running a multi-billion-dollar company like this. It's not to say that he doesn't have the skills to do it, but he doesn't have the relative experience to do this. That also, and also the company was dealing with multiple fronts of consumer, preference and changes in taste. People were going for more alternative, cheaper brands, and they wrote down $16 billion of goodwill for two of their brands, and they also decided that we need a new CEO, and they hire a guy from Budweiser named Miguel, who was their chief marketing officer for about a decade over there. And we'll get into the story of the management team. So in terms of their profitability, did anything improve or change from 2018? Well, no, things got worse. There was a negative 2% decrease in organic sales. According to their 2019 annual report, this decrease was primarily due to like unfavorable higher pricing of their items. All right, so their products cost more to the customers, right? So why is that? It costs more because it reflects the cost of commodity prices that were going up, such as meat, cheese, coffee, and nuts. So, commodity prices went up, so they had to, upcharge the customer a little bit more. So that's why there's like an unfavorable mix of pricing sale that decreased their revenue. And they also have inventory issues that were lower, lower shipments as well. And so this created a EBITDA adjustment down to like a loss of, or a decrease of about 8%, down to about 4.8 billion compared to 5.2 billion the previous year. And again, because of the inflation costs, supply chain, and commodity costs. All right, so what makes Kraft Heinz Kraft Heinz? What are the brands and products that are leading the company? In the chart to your right, you can see that commodity and sauces makes up their biggest profitability, right? And then cheese, which makes up additional 20-something%. So about half of their business is in cheese and dairy products and commodities. And then the other portion of their business is in packaged foods. And Right now, they're looking to get rid of Maxwell, for example, but they can't find any private equity or investors that are interested in buying off their Maxwell brand. And the Maxwell brand has been losing organic sales of like about 5%, 3% per year. So, what are their current strengths and weakness? Um, well, it's a good thing that one of their biggest markets in North America, there's some category growth, such as their, plants nut mix uh, products. They're getting better in the e-commerce growth. If you're looking for a Kraft Heinz ketchup or sauce on Amazon, it's easy to order on Walmart, Amazon, Target, etc. The international food services are also going up and they're stabilizing their supply chain. And most importantly, new leadership is in place. And we'll get into why new leadership is very important for Kraft Heinz. And I think that their leadership is also the reason why Kraft Heinz has been losing market share and pricing power, besides Warren Buffett and 3G buying Kraft for a little bit too much. So what are the areas of improvement? Obviously, they had lower inventory and supply chain issues, so they had to get that up. Uh, their their gross profits are going down because of commodity costs. They're losing a lot of money in Canada as well, and there's a lot of turnover in place at Kraft Heinz. Obviously, it's not very attractive to work at a place where there's a lot of turmoil. And so they laid out a strategic turnaround plan in 3 steps. They're going to focus on the future of growth, and they're going to make their current brand even stronger, reinvesting in the brand. And obviously, they need to hit the top line and the bottom line of their income statement. Right. Now, leadership. I believe this is one of the most important factors for Kraft Heinz. So Miguel previously replaced his CEO from 3G Capital, who was, and if you don't know about 3G Capital, 3G Capital is well known for making a lean operation. That's their business model. They go in and they cut costs everywhere they can figure out if it's possible. In terms of cost cutting, the CEO did a little bit too much. He also cut the cost of marketing, and you can see supply chain having some issues where they're not reinvesting in their business as much. And when we go into the into the financial statement, you will see that CapEx has decreased it went down to about 3% with the old CEO in place. So out of all these leadership, I believe one of the most important changes of leadership let me talk about Miguel again. Miguel he is not like a number guy or a cost cutting guy. He comes from a marketing background, so he believes in creating relationships with the customer and cultivating the brand within the store. When he took the CEO position, immediately within his first month, he met with all the major retailers to talk about strategic alliances and to make sure that Kraft Heinz and the grocery stores were aligned and their interests were aligned. And the person that's going to lead all of this growth and connecting the customer base and the digital growth is the Chief Growth Officer, Nina Barton. I watched Nina Barton's YouTube video when she was talking about connecting the customer, digital strategy, consumer preference and taste. She mentioned two things. She mentioned one is convenience, and the other is understanding what the customer wants and healthy food, right? So I think they. Oh, and the chief growth officer is a new position within Kraft Heinz. So Miguel created this position specifically for her. And if you go to LinkedIn right now and look at jobs, new job openings, you can see that from 2010 all the way to 2017, 18, marketing uh, employees went down like this. And ever since Miguel was hired, marketing team uh, was hired again. You know, they hire a whole bunch of people to market their products. Now, for their financial statements, you can see there's a loss in revenue growth year over year, almost every year. Nothing looks pretty here, except that they can maintain profitability in their business. Oh, show that twice. All right. So, what does the future look like for Kraft Heinz? They're losing more market share, more marketing. They're going to have to spend more money on marketing, and they're going to have less pricing power, and it's going to eventually be like it's going to lead down to less margin over time. I believe that could be a short-term thing, depending on how consumer reacts to the um, marketing aspect of Kraft Heinz. Well, consumer preference are still changing, and they're trending towards more healthy alternative food versus just packaged food. Kraft cheese brands, which makes up about a quarter of their revenue, has the weakest pricing power, right? Because they're commodities. And not only that they're commodities, but these cheese and dairy products also have commodity risks. And on top of that, you just have more debt risk. They recently took out another $7.5 billion in their revolving credit. They max out their credit card pretty much right now. They can't they can't extend for another they can't go to American Express or Visa to ask for another credit card. So, it's kind of like a do or die moment for Kraft Heinz at this moment. Now, let's get into let's see if I miss anything else. All right. Valuation range. All right. So a lot of analysts were thinking that so many analysts were predicting back in December 2019 that Kraft Heinz could be worth about $40. That's assuming if there's like a 2 to 3% top line growth rate and margin stays between 22 to 24%. My valuation of Kraft Heinz is about $30. All right. Does that work?
Yeah, got it.
All right. All right. So you see the previous CEO has been cost cutting for a while. It went from about 4.7% down to 3.1%. So when I was doing my valuation, I increased
Sorry,
their capex.
I think you're on the wrong screen again. Here, we see your face.
Oh, really? Oh. Hold on. Why does it show my face only? Share screen. What about now? Do you see everything?
Yep. Perfect.
All right. All right. So, Kraft Heinz historically their CapEx was around 4.7%, and it was cut down to 3.1%. Now, for my financial model, I ramped back their CapEx to 4.5% just to get it back to, I would say, normal CapEx level that's required for them for the supply chain and then everything else that's going on. I kept working capital the same at 2.1% of their historical averages. The only thing I changed was their CapEx spending. I increased that, and I also decreased their EBITDA over time while keeping their revenue flat. And so that's why I said, Kraft Heinz could be a low-hanging fruit if they can maintain market share and margins, right? It should be hard to get, like a 24% EBITDA margin. And it should be hard to not lose any more revenue growth, but who knows? They might continue losing 2% each year. If that's the case, not for 2020. Let's say for 2021, they drop because of the pandemic, they can stay flat, right? Let's say 1%, 2%, 2%, 1%. All right. So it will say fair value is at $31, which is what the market assumes today. So the market assumed their price is about $30, right? So their expectation is that this is how it's going to look like in the next 5 years. Pretty much growth is going to drop about 1.5%, and margins are going to drop down to about 23%, which would provide a fair value of about $31. But, if they, get like a C in the class, hopefully the management team does, perform at C level, then we can expect maybe $34. And if they perform at a B level, the stock will go up easily to $40, right? Because now they gain the trust of the investor. They're getting back market share. And for a big ship to get, 2 to 3% growth in the food market where it's very competitive, would pretty much send the stock flying back up to even like $50 ranges. So, this is a watch and see stock. You're gonna have to watch and follow what they're doing. I've been following them for about 2 years now, and unfortunately, I bought it at 40 something dollars. So I gotta thank 3G for that. I sold out around $32, and then I'm gonna plan to buy it when it gets maybe to like $28. But we'll see. I'm gonna wait for at least 2 quarters for them to kind of like ramp up and let this COVID virus thing dies down and see where the market psychology is at before getting into another position with Kraft Heinz. Or if it dropped dramatically down to like $24 because people are panicking, then yeah, I would buy Kraft Heinz again.